So today we're going to be doing an analysis of Adecoagro, ticker AGRO. Adecoagro is an agricultural industrial company operating in South America. Basically, what this means is they're an agricultural company and they have a small industrial component, which we find out later is just a biodigester, which they use their leftover farming products and they throw them into the biodigester to create electricity. So a little bit interesting. But their main areas of operation are their agricultural sugarcane and sugar production, rice, dairy, and then energy, which is from their biodigester. So their main countries of operation in South America are Brazil, Argentina, Uruguay, and but their head office is located in Luxembourg City. Had to look up where this was because I'm not too familiar with all the small European countries, but it's just northeast of France. So it's a bit of a weird situation because they operate in South America. Their head office is in Luxembourg, but they trade on U.S. exchange on the New York Stock Exchange. So Adecoagro was founded in 2002. They have approximately 9,000 employees, market cap of just over a billion, and the float percentage is only 56. So there's quite a bit held by sort of close individuals and insiders. Dividend yield is 3%. Price to earnings of approximately 8, and then a revenue of 1.4 billion per year. This is for the last 12 months, I believe, but we'll see that. Yes, the last 12 months ending September 30, 2023. EBITDA of 434 million, earnings before interest and tax of 227 million, net income of 147 million, total enterprise value of 2.231. So taking a look a little bit at their shareholders, there we go, public ownership. So we can see about 36% are owned by institutions, 23% by hedge funds, 15% by venture capital or private equity, and 26.6% of public. This is higher than we normally see just because it's a smaller company. That's why we're seeing that much public ownership. The top shareholders, as you can see here, Qatar Holdings, EMS Capital, Route One, Jennison and Associates, and then PGGM. So pretty much all of these are just employee-owned hedge funds or private equity firms. I did some looking into all of these. Nothing too special, but it is interesting. The top five holders have about 50% of the company. Another interesting thing is just that there is no Vanguard or BlackRock. I have to do some more looking into why they do not have any stake in this. I believe it has something to do with it being based in Luxembourg, though. So we'll take a quick look at Adecoagro's management. So first of all, co-founder CEO, Mariano Bosch. He's been the CEO since Adecoagro was founded. Nothing too special. He's done a few other things as well, but nothing that noticeable. The second co-founder is going to pronounce this wrong, but Ezequiel Garbers. Right now, he is the country manager of Argentina and Uruguay. And prior to founding Adecoagro, he was the chief operating officer of another uh, agro-industrial company, which he co-founded, where they did consulting and some investment into other agriculture companies. Their CFO, the last person that we'll look at, it's a bit interesting. Well, the name is Emilio Federico Ganeco. Might have said that wrong again too, but it's interesting because he is the CFO and the chief legal officer. Bit of a weird situation. You don't see that a lot, maybe just because it's such a small company. You would like to see both of these roles separated, though. Won't go too much more into detail because it's just a high level overview. We'll go take a look at some of their margins, though, looking back to 2018. So ROA, pretty consistent. I'd say average of 4%. Not the greatest number. That's the return on assets. Return on capital, again, not too interesting, ranging from about 4% to 7%. Might just take a longer view of this. The return of capital, I really like this number, so it's interesting to get a long view of it. Yeah, pretty much just what we've seen in the last 5 years is the same going back to 2013. So we'll put this back to the 5 year spread. So we'll take a look at their gross margin. Higher than I would have thought for a South American agricultural company. It starts at around 25% at the start of our time frame and ends at around 31. It probably will change just because of the seasonality that we see. Oh yeah, they're pretty high though. Not what I was expecting. Definitely a positive sign. The net income margin. Take a look. So negative, break even, 11, 8, 10. So a bit interesting why they had 3 consecutive really poor years. In a deeper analysis, I'd probably look a little bit deeper into that. Maybe they had some write downs or something. But ending off fairly strong with about 10%. Would like to see that higher, especially with a gross margin of around 30% at that point. Current ratio, take a quick look at that. 2.4, 1.8, 2.1, 2.1, 1.7, 1.9. Lower than we'd like to see. I sort of figure on 2 as the baseline. Like that's the worst that you can be with still being financially healthy. So I'd like to see it around at least 4 or 5, especially with the agricultural. There's so many factors that are out of your control. So it's good to have a bit of a buffer in this space. Quick ratio, even worse, 0.8. Sort of consistently getting worse as we can see. Basically the same as the current ratio though. I'd like to see it higher. We're not going to do any of the timing or efficiency ratios, the days AR, inventory days, just because of the business that they're in, as it won't really make sense for most of it. Something that I've recently started doing is taking a look at the Altman Z-score. If I can find it, basically what this is it's a all-in-one ratio that basically just tells you if there's a pretty high likelihood of the company going bankrupt in the next year. Don't base your decisions off of this, but it's interesting just to sort of catch any mistakes that you might make and sort of just be sort of like a warning sign. Generally, the lower the score is, the greater the chances that the company will go bankrupt in the next year. Over 1 is considered healthy, so we are over 1. So hopefully we didn't miss anything. Taking a quick look at their leverage. I know we missed it, but so we'll take a look at their debt to equity. Starts off 2018 at 65% and ends off at around 80. So that's a long-term debt to equity. If we're looking at their total debt to equity, it's higher. Need to do some research on comparables, but to me, this seems high for this type of company to have 112% debt to equity. Last thing we'll look at is the interest coverage ratio. Again, lower than we'd like to see. As we can see, the EBIT to interest expense is 2.3, 1.7, 2.6, 3.3, 2.6, 2.5. Again, like that to be at least 4, just to sort of compensate for some of the seasonality and the factors out of their control. Now, normally I would go through some of their different filings and their annual report just to get a much better understanding of the business. But basically, just from what I've seen here, I won't be doing much of that. I have read through their annual report quickly. There's some interesting stuff. I encourage you to read it if you're interested. Just for the sake of me, though, I won't be going any more in depth into this, just because the South America part. I didn't realize it is a South American company when I first chose this to do an analysis on, and especially the areas of operations. I know that Argentina has had some significant problems with inflation, and there's also Brazil has its own fair share of problems. So I will not be looking into this further. I encourage you to look into it if you're interested. And again, just interested to see any questions about this, anything that you'd like me to go over in the future, different ratios or different research that you'd like to see. But for now, this one will be sort of put on the back burner. Interesting company, though.